Okay, welcome to part C. It's actually a little late here. It's about 9 p.m. I usually am not at the office this late. I had to run home for family duties. But I'm back. I have to finish this latter half of the video. And on the way here, I decided, you know what? The latter half has to be broken up into two parts because we're going to talk about in part C banking in Renaissance Italy. We're going to look at the Medici family in particular. And then for part D, usually don't have four parts. Sometimes I only have two parts. This time I have four parts. I'm going to explore the difference between full reserve banking and fractional reserve banking. Okay, so moving along on our list, we've already seen the demand for credit. Dealt with that. Wars between city-states. So in Italy, you may recall, looking at the map, there's not a single Italy. There are different Italian city-states, and very frequently they were at war with one another. And sometimes they were at war with foreign powers. The French, for example, were pretty continually encroaching on the Italian peninsula. And so wars were quite common, and wars are expensive, especially as the Middle Ages and as the Renaissance then continues. Warfare requires more expensive technology, and wars become a matter more and more of finance. And so this leads to government borrowing. And during the High Middle Ages and to the Renaissance, and of course all the way to present day, governments, in this case the Italian city-states, European monarchs, increasingly borrow money either from banks or from private creditors. A creditor being anyone with liquid cash, in order to finance wars. And this becomes a profitable activity if someone has money to lend to governments. This was the time that Machiavelli was writing The Prince, and in The Prince you read all about the different machinations of various government rulers, but war is central to the state's existence, and so being able to finance that warfare is vitally important. Now, a creditor or a bank could get in a lot of trouble if the government takes a step of repudiating its debt, and this was not unknown in the ancient world. It's not unknown today either. From time to time, a government would pile up debt and then decide, you know what, I can't pay it, and just repudiate it. And there was not a whole lot in those situations that a creditor could do about it, because the government has the force of the state behind it, right? It is the state. It has the force of the monopoly on force. That is one of the benefits from a state perspective of being a part of the state, is that monopoly on force. Two examples. The gentleman you see here on the left was the King of England, Edward III. And Edward III borrowed heavily from Italian banks, specifically from Florence. And in 1345, Edward III publicly repudiated his debt. So I'm not paying it, I can't pay it, and I won't pay it. And as a consequence, many Florentine banks, several of them went under, and many others were seriously hit. What are you going to do about it? And so now, the problem with repudiating your debt, if a state repudiates its debt, you say, oh, they got away with it. Wow. Well, technically they got away with it. However, now their reputation is greatly harmed. You could say their credit is bad, and for good reason. And so the chance of that state being able to borrow money again is very, very low, or they're going to have to, really be persuasive about, hey, I'm going to pay this back for real this time. So that's the risk in repudiating debt. Nonetheless, time to time, governments do it. Man here on the right was the King of Spain, Philip II. And Philip II in 1596 repudiated his debt. And this ruined a bank in Genoa, where Philip II borrowed heavily from Genoese bankers. Ruined his credit. So, time to time. But governments will sometimes do it, and so that's a risk in government, in lending money to governments, because governments have that unique advantage of being able to maybe try to pull something like that off, even if it does have really bad consequences for that government. Okay, abundance of coin led to a demand for deposit banking, and this is a really big subject, because it's in Renaissance Italy that we see the first really modern banks, or proto-modern banks, might be a little more accurate. But abundance of coin led to a demand for deposit banking. So the first bank proper in Italy was founded in 1157. It was the Bank of Venice, and we called it a bank because it was a collection of people who came together and essentially incorporated themselves and created this bank, pooled their capital together and formed this institution. And from Venice, banking then spreads throughout Italy. I already know Genoa, but especially Florence. Now, banks are highly useful. Banking has certain advantages that an individual creditor doesn't have. Unlike an individual creditor who has, some liquid cash that he can lend out, a bank can pool capital together from its associates, from anyone who's part invested in that bank, or from depositors. So if you want to deposit money in the bank can then pools all that capital together, and so has more capital available for larger projects, and the bank has the ability through economies of scale to diversify risk. So if you're an individual creditor and there's a risky undertaking that someone has come to you and wants to borrow money, and you're, I don't know exactly. As an individual creditor, you're less likely to engage in it, because if that project, if it succeeds, there's a huge payoff. But if it fails, you may be ruined as an individual. However, a bank, since it has so much capital, can afford to maybe take that risk because it's diverse. The bank is able to, through economies of scale, is able to diversify its various investments. So that's an advantage. Now you may ask, Professor Barth, I thought usury was prohibited except for Jewish money lenders, and that is true. So how did Italian banks during the Renaissance period make money? The question is, or the answer is in a variety of ways. First of all, they accepted money deposits from clients. So one of the reasons why deposit banking was attractive, if you have a lot of coin, you don't want to just keep it in your house. That's very risky. You have robbers who can come in and steal your money. So it's safer to deposit that money in a bank that might have certain security measures in place that you don't have. And also, by depositing your money in the bank, perhaps the bank will be able to reimburse you for that deposit, or be able to take your deposit and then invest it into other loans or into other assets, and you can make some money from your deposit. So Italian banks made money from some of these money deposits. Italian banks also make money by charging administrative fees, and here was sort of a gray area where, it's not called interest proper, but we charge administrative fees for loans, and there were certain ways to get around the ban. So the Jewish money lender was able to just nakedly charge interest without making any pretense about it. The Italian banks had their ways of making a profit from lending money, and one of those, the church had stated that was acceptable and not immoral to charge a fair administrative fee, and so you better believe the banks were on that. But also, Italian banks can make money by buying and selling bills of exchange. If you come into town and you have a bill of exchange and you want cash, but you're unable to give it to pass that bill of exchange on to the drawee, you could go to a bank and they would buy that bill of exchange from you, give you cash, but for a fee. Everything's for a fee. Of course, they're not going to do it for free. I think that's a reasonable expectation. Money changing. Come in, you have for money, I need local coin. Oh, we'll change that money for a fee. We'll lend money to governments for a fee. Right, all of the fees at every single level. So there were lots of ways to make money for a bank without technically violating the church's prohibition on usury. And this is similar methods are used today in the Islamic world as well. I didn't put on here, I'm not sure how I forgot this, but one of the biggest ones was making investments. Taking that pooled capital and then using it to invest in different ventures. That was another really big way for a bank to make money. Italian banks in this period innovate by adopting double entry bookkeeping. Now, double entry bookkeeping goes back to the Roman era, and there was some use of it in the Middle East, but the Italians really master it. In double entry bookkeeping, if you've ever taken an accounting classes, you know, the assets equal liabilities. Whenever there's a debit, there must be a credit, and everything must correspond. The debits and credits must both sides of that must be equal and correspond. So this was a really big advancement, the Italian mastery of the double entry bookkeeping system that furthered banking during this Renaissance era. Many, not all, but many of these Italian banks also issue the first, in Europe, the first banknotes. Now, I called a few lectures ago Flying Cash the world's first banknote. I still stand by that. But this is really the first paper note truly issued by a bank, like a bank proper is issuing this note. And it's a banknote is a paper note. Here you see an early one. I was trying to find earlier and I couldn't. In the early days, banknotes were actually written out, not printed. A banknote was a paper note issued by the bank that was redeemable on demand in specie, or I have their coin. Specie just means gold or silver. So the bearer of this note at any time could take this note to the bank that issued it and redeem it for that sum of coin. Okay, so it's a representative money. This banknote represents a certain sum of coin. And technically, in theory, the banknote, while it circulates, and we would call it currency because you remember our definition of money. Money is a commonly accepted medium of exchange. And so if this banknote is circulating throughout the economy, it is in fact a currency. But technically speaking, this banknote represented money. You get the difference? It represented money, represented coin that the bank had and would give to anyone who presented that note to the bank for the said coin. These freely circulated hand in hand, and unlike a bill of exchange or a check, it did not have to be endorsed over. You know, if you use it, you didn't have to write the person's name on a note. You just it freely circulates like coin would. These were also privately issued, really important, and unlike the Jiaozi paper notes issued by the Song Dynasty, these were privately issued, not issued by government. However, coinage is still monopolized by government. So the government coins the money, and then the banks issue the representation of money, a paper representation of money that's backed by money. Okay? See the distinction there. It's important, even though they're both operating as currency. Okay? Government still monopolizes coinage, but the banking system now is getting into the business of creating paper notes that represent that coin. So I mentioned how the first bank was in Venice, But in Florence is where banking really took off. By the 14th century, there were somewhere between 70 and 80 private banks in Florence. Some were smaller, some were very large. And as a consequence, we looked at this coin earlier, the florin, the gold coin, all throughout Europe. And many of these Florentine banks actually established bank branches outside of Florence in other Italian city-states, or even in other parts of continental Europe. You might find a bank branch of one of these Florentine banks, and it was not uncommon for Florentine banks to lend to other governments, to other European governments. I mentioned Edward III of England was one of them. But there was one Florentine bank that was the most powerful of all, and actually the very first powerful banking family in world history. And it was also the wealthiest family in Europe, and that was the Medici family. Sometimes you'll hear pronounced Medici. I will be saying Medici, but both are correct. Both mean the same family. The Medici family dominated Florentine banking from the 14th through the 16th centuries. Really began to get it started around the 13th century. And here we see some of the Medici leaders of this family, and became so wealthy they began to they're actually the first family to, because of its economic success, to transition over to hereditary status and governmental power. To give you a little hint into just how powerful this banking family was, this is Lorenzo de' Medici here, Lorenzo here as well. The Pope was one of their major clients. The Pope, and they conducted money changing services for the Pope. The Vatican got all sorts of different foreign coinages pouring into the Vatican from all over Europe, and the Medici performed that very valuable service of changing out the different foreign coinages into a local coinage for the Pope. They were also big patrons of the arts and of the sciences. Many of the old, we looked at in the last lecture, at all the different Renaissance paintings and sculptures. Michelangelo was given money by the Medici. Many Italian merchants actually gave money to these Renaissance artists in order to complete works. They also gave money to Galileo. So Galileo, for his work in science, was the Medici financed much of his work and activity. They weren't professors at universities. They didn't get a salary or anything like that. They had to have a wealthy patron, and the Medici filled that role. So quite powerful. They even earned their own coat of arms. This was a royal coat of arms. This right here, another royal coat of arms here on the right. The one in the center was the arms for the Medici popes. And yes, indeed, two members of the Medici family became popes. Think about that. The papacy. The Medici infiltrated the actual office of the papacy. On the left is Pope Leo X, and on the right is Clement VII. Pope Leo X, by the way, was the Pope when Martin Luther posted his 95 Theses. You can see why a lot of the and then Clement VII followed Pope Leo X shortly after. So you have a succession of Medici popes. You can see why Martin Luther and many other people at the time believed that the Catholic Church had become corrupt beyond repair. Even devout Roman Catholics today will be first to tell you that, the church struggled with some corruption during this period. But think of the power in that. But it wasn't just the papacy. The Medici, two Medici became queens of France. 3 became dukes. And super, super powerful family. Pretty amazing. One note about the Medici, and we'll go into the final part of this lecture video. The Medici, these are full reserve banks. full reserve banks. And for part D, we're going to look at this topic of full reserve banking versus fractional reserve banking, because fractional reserve banking is going to play a major role in this course. I think this is probably a good time to get into a little bit of banking theory. So see you for part D of lecture 9.